Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'll be presenting now the Tracking the Forex Market Together Part 2 webinar. I gave the Part 1 between 8 and 8:45 GMT during early part of the European session. And today we are on October 7th and between 13 and 13:45 GMT, I will give the explanation with regard to the trading strategies, what we try to do, and how exactly we are able to consistently earn money from that of the market, irrespective of the market conditions. So it is a simple market tracking technique. I'll explain the technique and also the effective trading strategy, how exactly we use the trading strategy to earn money during the volatile moves of the market. So we are in a position to view the volatility as a trading opportunity and profit grabbing opportunity, and we don't become afraid. So once you eliminate the fear from our mind, then we are able to perceive the market as great earning opportunity. And that is what very important. So psychologically, we should be prepared for such volatility. And when we become surprised, when the market makes unexpected move against our expectations, then we become surprised. And if the market is making the move in line with that of our expectation, then obviously we perceive it as a right trading opportunity or profit grabbing opportunity. So how exactly we'll be able to convert such surprises into that of the profit earning potencies? It is very simple that you always envisage or always expect the unexpected. So once you expect the unexpected, okay, when unexpected happens, immediately you realize, okay, this is against my expectations. So in the event of unexpected thing, this is my trading strategy. When you have the ready reckoner, when you have automatically or the real trading method available before you, then you don't become stunned. You are in a position to control your positions and don't allow the usable margin to get eroded. See, most of the traders lose their faith in trading only when the usable margin gets eroded. Because we all do the leverage trading. So the leverage can be 1:50 or 1:200. Some platforms are offering 1:500. So they are all nothing but adding risk to your trading. So more the leverage, more the risk you take into consideration. So if there is no risk, then obviously we need to go in for the actual currency conversion trade. In the currency conversion trade, you don't envisage the risk because you can afford to hold the position. There might be inbuilt loss, but still you will not be closing the position with loss. Only after seeing the profit, you can convert back into your respective currency. Thereby, in currency conversion trade, you will be able to consistently earn money from that other market. There again, the fear plays a vital role. So you should be in a position to recognize the profit earning opportunities with the right perspective without any greed. So how exactly it can be done? It is simple that once the market makes quick moves, understand they are all false moves. So that is what I was explaining to you during part 1. And then we will go into that of the what we suggested during that. So in part 2, we will be watching the market move during that of the gap time. So 13 to 13:30 GMT will be the gap time, and how exactly they are making the moves during that of the gap time, and also the first 15 minutes of the US session. So, and also we will refer to that of the high, low, and net change with regard to all the 4 majors and to the commodity pairs, and find how exactly the market is expected to go further. And also, I had taken the positions during that of the early part of the European session. Now the European session is over, and the market is has entered into that of the gap time. it is 13:04 GMT. 13 GMT, the gap time starts before the start of the US session. 13:30, the US session starts. That is what I explained it during that of the session timings. Okay. So 13:30, the US session starts. Now we are on 13 to 13:30 GMT, the gap time. The gap times, they are expected to make the false move. So let us see how exactly the positions what I had taken, and also I gave the explanation during that of the part one that on what basis I am entering into that of the market. And at that time, if you refer to that of Euro, GBP, etc., Euro was trading around 1.2626, and you know that I just explained that 1.2601 was the uh, 06 was the initial low, and so I kept 1.2607 as the buy order, and I was explaining to you that they are unlikely to make a downward stop and during the mid session, because normally when they are handling the crosses, when you come across the contrarian moves like Euro showing negative net change, USDN showing negative net change, they are unlikely to breach the high or the low. But they breached the low in the case of Euro. So this is how they sometimes handle it in the event if they come across more stops below that. So we are able to understand, but still I kept 30 pips hedge order. So that hedge order was not filled, but they came below that 1.26 and then subsequently made the rise around 12:40 GMT. I closed it around 1.2626 level with 19 pips profit. So the hedging order was not filled and I was able to book about 19 pips profit. And I was explaining with regard to GBP that between the high and the low, the middle level, the psychological level is 1.6050, and they will try to hit the stops below that or just go below 1.6050 just to give a bearish feel, and also for the traders to, they will induce the traders to go sell and buy trade once they go below that of the psychological level, but they are not breached the low. It came to exactly 1.6045 and reversed and went up to 1.609599 during that of the late part of the European session around 12:40 GMT. I closed it with 50 pips profit. I kept the hedge order at 1.6015 and that was not filled. Market has not gone below. And with regard to yen, I was telling you that they are holding it below that of the initial low, 108.69. So I took SL position and I was telling you that 108.39 was a low and they are expected to breach that low since they were holding USD yen below that of the initial low for more than 2 hours. That means they wanted to make further downward move. So I just took a sell position to show you how exactly we'll be able to predict the market. And then I took a sell position with that of the hedge order 108.87 and they came up to 108.75 and then subsequently came down and breached 108.39 and came down. And at that time, I just booked profit at 108.36. They came up to that of 108.32. Still, they are holding below that of 108.39 now. So they are likely to make further downward moves in the case of USDN during early part of the US session. So I booked about 21 pips profit in that. And the hedge was not filled. Then I was explaining to you a technical trade in the case of Australian dollar, and 87.84 was the initial high, and after 30 minutes, up to 2 hours and more, they have been holding Australian dollar above that of the initial high. Then I told you that I will take a buy position around in the market 87.90 with the 30 pips hedging order and also try to close. I was telling you that they are likely to go to 88.15, 88.50 level. So I just took the buy position and it went up to 88.17 and around 88.15, I closed it with 25 pips profit. So now you can understand that these are all the positions I took before you. And these are all the positions I closed within European session. So in a session-wise trade, you will be able to capture the profit. But I took the positions at a later stage, or I wanted to take the positions during that of the webinar time. That is why. Otherwise, I could have even fine-tuned. I kept the limit order in the case of Euro and GBP, and then subsequently they got filled. Otherwise, we can watch the market, and whenever they come closer to low, and watch for 30 minutes if they are, whether they are making a false move near that of the low or making a breaching, a downward stop in the case of Euro. And I could have taken a buy during such downward stop and also maximize the profit. But I wanted to emphasize and tell you that trading becomes easy if you perceive the market moves properly. That is what we need to understand. See, unfortunately, what has happened, we are all being misguided with various factors, and they are all the indirect methods by which we are supposed to understand the market with a common telling or with a common message that market is huge, nobody will be able to operate. So immediately when we see that so many traders are participating, it is next to impossible to manipulate the market. So we follow the technicals and fundamentals. Ultimately, what happens when you follow the technicals and fundamentals? Nearly about 50 to 60% of the time, we are able to earn money. The balance time, we are able to lose the money. And that is why you find very limited progress among that of the traders. So ultimately, we need to fine tune and find out where exactly our problem is. It is not the question of we are facing a problem. We develop the market sentiment following the market moves. On Friday, I was explaining during part one, on Friday, when Euro and GBP made the drop, and most of the traders developed the bearish feel and thought that, okay, there is the end of the world. Hereafterwards, we'll come across Euro and GBP will make only downward move. But to the surprise of such people, when they have already liquidated the long position out of fear, the players gained all the way the levels about 150 pips from that of the low. In the case of Euro, and also from in the case of GBP, about 200 pips, they gained simply for no reason. So whatever the sentiment created by non-farm payroll is being discounted in a matter of 2 trading days. So we are creating so much of hype for non-farm payroll, and we are envisaging what is going to be the non-farm payroll. And based on that only, I'm going to plan my trades. So until such time the non-farm payroll is not here, I'm not going to commit any position. Okay, fine. And after that, we commit the position and see that we are losing it. So what is that guarantee that we'll be able to earn money following the fundamentals? So we have to reflect on that. So the major problem is that we develop the sentiment. We find it extremely difficult to change our mindset from that of the sentiment. But the players change it very fast. So we also develop the sentiment that, okay, this particular analyst is very good, so we'll follow him. But once his calls go wrong, immediately we start hating him and go to some other analyst. So that is normal tendency. So in that process, what happens? Once we develop the hatred towards that particular man, even though you find that analyst is giving right calls, subsequently also you become defensive. You don't try to follow him. So we take a longer time to get convinced with regard to the sentiments. But market does not take such a long time. The players create the market sentiment and act against that of the traders as quickly as possible in a matter of about 24 hours. So from Monday, Japanese session, they have been consistently gaining the levels in the case of Euro and GBP, and nobody questioned it. Why they are gaining like this when non-farm payroll was so nice and which was beyond the expectations of anybody. And immediately people will say that market look for the future. So what is future? FOMC minutes. So that is why the market has reacted. So we forget about what has happened to non-farm payroll, how we have lost the money, and we look for FOMC. Okay, until the FOMC is out, I'm not going to take position. So it is something like we wanted to take bath once the waves settle down in the sea. Is it going to be a situation of that kind? Seas are there to continuously give the waves, and we cannot stop it. And it is next to impossible to have a bath once the sea waves subside. So it is very similar to that. So why we take such decisions? Because we continue to lose money, and we do not want to lose money further, and we wanted to have a double confirmation before entering into the market. That is why you find many of the analysts, they go in for double, triple, and quadruple confirmations using various types of charts, various types of analysis, etc., to find out what is going to be the next scenario. But the market creates the surprise, because that time it is not due to that of the technicals, it is due to fundamentals. So nobody is in a position to find out whether the fundamental is going to rule for next 30 minutes or 1 hour or 1 day, or the fundamentals or the technicals are going to rule. So I was telling you on Friday that the market is corrected in a big way. There are so many times that they made about 150 pips drop or the rise for non-farm payroll. And when the payroll was good, and subsequently they reversed the market on the same day or the next day, telling that the market has gone for a risk appetite. And there are occasions wherein the non-farm payroll was dismal, less than that of expectations. And then the market went up. Euro and GBP went up for the non-farm payroll because it was less than expected. And people thought that Euro and GBP will continue to rise, and they had dropped it and simply said that it is risk aversion because US economy is doing very bad. They want to stay in US dollar. And sometimes you find that gold goes up in a big way and say that everybody say that it is the risk aversion. Because of that, they are going for the safe haven instruments. And now gold is trading at the lowest level. Nobody call it as a safe haven. Actually, we have to buy gold when it is available in cheap condition. But all the analysts are telling that gold will make further downward move, and those who have taken the long position, they also find that it is not going up, so they liquidate the long positions. And the players are all happily buying when the traders are liquidating at the lowest level, similar to that of the currencies. And later on, they will pump it up for the year end. And then everybody will say that, okay, it is a safe haven, or it is available at an attractive price. So every time you come across that certain attributes are given, and we feel that those attributes are true, ultimately we find that they are all short-lived, and we are not supposed to create the sentiments based on that. That is what we need to understand. If we create sentiment, we find it extremely difficult to change the sentiment, and in that process, we tend to lose money in the market. Now you find that gap time, they are gaining the levels in the case of Euro and GBP, and also losing level in the case of USD yen and USD CHF. So I explained it. Gap time moves are false moves. This is the gap time, 13 to 13:30 GMT, and the type of moves. You see the false move, which happens during the gap time and also before the data release. So when they are making a dip in the case of Euro and GBP, rise in the case of Euro and GBP, what they intend to do during the early part of the US session. They are expected to make a dip in the case of Euro and GBP during early part of the US session, and again firm up towards close. So they are doing this particular type of move in order to induce the traders to do sell and buy. And the traders will think that, okay, this is a good level to sell, so that there will be a drop. We can book profit because still they are in the bearish field, and later on the players rise the market, induce them to do the short covering. Then once they lose 2-3 times, immediately the traders turn bullish. The traders think that dips are buy opportunity because now the market has breached all the resistance and gone to that of the support level. And so obviously when it comes closer to support, we should buy. So tomorrow people will be interested in taking buy and sell trade in the case of Euro and GBP, but the players are going to drop it in a big way because they don't do hat trick. 2 days they consistently gain the levels. Third day they just simply reverse the market, make either way stop wins on the upside as well as the downside before that of the BOE interest rate decision. For that they are expected to make the upward spike. So I'll just show you the slide, what I have shown it during that of the early part. They are expected to make the slide tomorrow after initially during the Japanese session and also during that of the European session, and induce the traders to liquidate the long positions before making the spike for that of the BOE interest rate decision. So ultimately understand, don't go with it of the market. Don't think that that is going to be the trend forever. And the players are here to make the market appear it is US dollar sentiment or USD weakening sentiment and simply change from time to time. Thereby, they are able to easily trap the traders. And the traders continue to lose, and still they don't have any alternative to follow. It is something like sitting in a dark chamber and we are looking for light, and a small feeble light is seen. Immediately we think that is the one which will be able to save us. And that is why most of the people still stick on to that of the technicals and fundamentals. And when you listen to that of the webinars given by various analysts, they say that there are a lot of limitations, but no alternative is given. So I thought that it is essential for the small traders to know a simple tracking technique. And what is the tracking technique? That is, you note down the initial lows and the highs around 3:30 GMT on a daily basis and compare it during different sessions of the day and see where the market is. So now Euro formed the initial low and the high. See, you can see that they made an upward stop in the case of Euro above that of 1.2662, and then subsequently made the drop below that of 1.2605, came to that of 1.2584, again gone up. Now gap time, they are gaining the levels. So that means during session, they are going to drop. So let us see. I'm not taking a position, but I'm just telling you that these gains indicate that they want to drop first 30 minutes of the US session. Once the gain, quickly, don't immediately jump into the market. Don't go in for a technical trade because we need to find out when they are making such rises. That is what, when you follow the chart, you won't be knowing whether the gain is happening during that of the gap time or during that of the session. And the timings followed by the player is vital for us to track them. Then in the case of GBP, 1.6032 was the initial low, and they just breached and came below that during that of the European session, early part of the European session, and then subsequently, late part of Japanese session, and then subsequently made the upward stop on 6115, and we saw that during that of the early part of European session. Still they are not breached it, they are coming closer to that. Probably they may make a brief upward stop on there and come down quickly during the early part of the US session, and then continue to rise afterwards. After making about 20-30 pips downward move, then they will do it. So this is what I was telling you in the case of yen, that they have been holding below that of 108.69 for more than 2 hours. That means they wanted to make an intentional move on the downside. So if somebody says that yen is well supported or probably around 108.34 and it will go up, they simply breach and go below. And so it is an intentional move on the downside in the case of USD yen. And it doesn't mean that when USDN drops, that is actually USD weakening move. And you might be thinking that, okay, they are just weakening US dollar, not at all like that. And you find even that euro is showing negative net change. So when euro is showing negative net change, USDN is showing negative net change. That means euro and they are trying to drop, nothing more than that. So they are handling the N crosses. And also here you come across the USD CAD is in positive net change, Australian dollar is in positive net change. Both are showing contrarian move. That Canadian dollar is showing the USD gaining move by making an upward move. And Australian dollar is showing the USD weakening move by making an upward move. How they are cutting the high, you see, during the gap time. And 13:30, the US session starts. So during the gap time, they are making an upward move. And in the case of Australian dollar, they made the upward stop end. But in the case of euro and GBP, they are coming closer to that of the high. In the case of yen, they made the downward stop end. Then in the case of CHF, they just made only 2 pips stop end below that of the initial low. On the high, also they made about 5 pips. So here you come across the spread is very narrow. So when a spread is very narrow, around 30 to 40 pips, you find such currencies, if you take position, the profit booking opportunity is very limited. Then in the case of Canadian dollar, see, find that 1.1129, they showed it during that of the late Japanese session and still they are holding it. And only the high, they just cut that. And they are making the either way stop ends. So high, they cut it by 3 pips and then come down. So they are likely to cut the low again and then go up. So that's what wide range swings they are making it in the case of Canadian dollar and making sideways move, hitting the stops on either side. So one can buy here, sell, book profit, again buy here, book profit. That way you can do it. And in the Australian dollar, as I was telling you, from 0.8650 range, they are expected to go up to that of 0.8850 level. They come up to that of 0.8827 now. So 0.8780 they breached and stayed above during that of the European session for more than 2 hours. That's why I took a buy, so that we'll be able to definitely book profit. So ultimately, the type of move is very important for us. So if they stay above that of the initial high and the initial, below that of the initial low, and for more than 2 hours, that means the intention is to make a drop below that of the initial low or make a rise above that of the initial high. We can go in for a definite trade. Hope you are able to understand this. So this is how we fine tune. So we don't relate all the currencies and simply say that there is going to be US dollar weakening more or US dollar gaining more, etc. Because in currencies like say yen, they are making the US dollar weakening move. In the case of Canadian dollar, they are making US dollar gaining move. Both are denominator currencies. So in order to handle the crosses, they make such contrarian moves. So we need to understand that. And then try to take positions in the respective currency rather than simply developing a feel it is the US dollar sentiment or euro sentiment, etc. And that is a wrong approach to that of the market. Now, so we need to find out whether they are making the stop end or a false move. Stop end, they do it during the session start and the session close time, the early and the later part of the sessions. False move before that of the data release and also during the gap time. Then the extended move, they alternate with that of the intentional move. Extended move is up to 2 hours. Afterwards, they reverse the market. Extended move, false move, stop and they are all quick moves. All quick moves are false moves in the market. The intentional move is the one which will be very, very sluggish. Pip by pip, they will be gaining, or pip by pip, they will be losing the levels. And that is how you can easily take the position. There won't be any retracement. So calmly you can keep 30 pips hedge order as I kept it, and they will not fill that hedging. So if you identify the intentional moves and then try to take positions, you find your hedge will not be filled. And if you simply think that anytime you can do a counter trade, then they hedge it. Hope you are able to understand. During the intentional move, if you take positions, you will not be hedged. And during the extended move, during false move, during stop and if we try to do counter trade, they might hedge. At that time, you should know how to clear the hedging positions. If the hedging position is making loss for more than 30 minutes, you close the hedging position and keep another hedge order in order to limit the risk. And if the hedging is making profit for more than 30 minutes, understand the market is going against our expectations. Simply keep stop at entry in the hedging, let them go anywhere they want, and later on they will reverse it. Especially in the case of Euro and GBP, they will make either way moves. This same is not applicable with regard to the denominator currencies, wherein they make one-sided moves. So I explained many times the denominator currencies make one-sided move. What are the denominator currencies? The currency names are given in the denominator. They are all nothing but the ratios. Euro USD is a ratio and USDN is a ratio. Whereas in Euro USD, Euro comes on the numerator, USD comes on the denominator. Whereas in the USDN, USD comes on the numerator, yen comes on the denominator. So such currencies are called denominator currencies, USDN, USD CHF, USD CAD. And there they make the one-sided move. So in the case of Euro and GBP, they make either way stop and or either way moves. So there you can do the trade with the hedge very easily. That is why small traders, I recommend always to take position only in the case of Euro and GBP and keep the hedge order so that you will be able to continuously make profit on the hedge side as well as on that of the original side. But if you take in other currencies, many of the people out of greed, they go in for the crosses. And some of the crosses, you know that where they have started and where they are making moves, they make about 1,000 to 1,500 pips against you. Still, if you hold the positions, it is extremely difficult to get back the lost money. So there the trading strategy is totally different. So you need to close the original position and continue to trade with that of the hedge. Otherwise, in Euro and GBP, you can do either way trades. Book profit on the buy side as well as on the sell side. Thereby, you continue to earn money from that of the market. And if you earn maximum profit with a lesser position, that means your money management is very good. Instead of that, you take about 10 lots and try to close it in a matter of about 10 minutes, 15 minutes, thinking that I am making about 100 pips by taking 10 lots. If the market goes against, you lose also in a similar way. So high risk, high reward, you try to plan it without a stop. And if the market spikes, then your account is closed. And that is why you come across in all the trading platforms that margin call system is there. So you should understand that we are all given the leverage so that the margin becomes a must. If we are doing the currency conversion trade, then there is no question of margin because you do the trade as 1:1 ratio. But in a leverage, 1:50 ratio or 1:100 ratio, then you take 50 times exposure than that of your normal capabilities. Then accordingly, you have to do the money management properly and take very less positions, only 1/10, 1/100 of your equity. Take the positions in the event if you do not want to use the hedging of the stop, then you will be able to hold the position and earn money, but not impossible with regard to the crosses. There, if you take the position on the wrong side, wait for several days, the market will go only against you, and you may not be able to see the profit, and it will erode the equity continuously. So you need to understand that in the case of crosses, the trading strategies are different. But actually, why such variation is seen? Because the volume is very less when compared to that of the majors. So in the case of crosses, that is why the players make very big move in order to attract margin call for such traders, not simply hitting the stops. In the case of Euro and GBP, traders continue to take the buy and sell positions. And as a result, you find when the traders take buy and sell positions, then they have to hit the stops of the buyers as well as stops of the sellers. Now they have come closer to that of the high, and they just breached the high in the case of GBP. They breached the low in the case of yen, and they breached the low in the case of CHF, but breached the high in the case of yen. but not the low in the case of Canadian dollar. So they are handling only specific currencies. So now simply they are holding Canadian dollar, the rest of the currencies they are handling it, and it just session started. It is 13:35 GMT. 13:30 the US session starts. Okay, 13:30 the US session starts. So I was telling you that gap time they gained quickly. So you just watch what happens to that of the market when they are making an upward stop, and during that of the start of the session, we watch the market, and when they are making, watch the market when it is near the high or the low, and when it is near the high and make an upward stop and watch for 30 minutes. And if they come below that of the initial high in less than 30 minutes during start of the session, then understand they just made an upward stop and to make a downward move. Then you can take a sell and buy trade. So you should not immediately think, what? I recommended a buy and sell trade during the European session, and now I am recommending a sell and buy trade. Yeah, that is how we need to read the market, understand what the players are trying to do it, and then take positions. It is not simply or blindly taking the contrarian positions. So we need to have a full understanding what type of moves they are doing it. And so gap time moves are false move. When they are making a dip or gain during the gap time, we know that session start, they opened near the high or make an upward stop in one or two currencies. Now, you would have noticed that Euro, they made a downward stop, and at that time, they did not do it in the case of GBP. And now they have made their upward stop, and in the case of GBP, you can see that it will come below that of 61.15 in a matter of another 5-10 minutes. And later on, you will find that it is only an upward stop and to make a downward move to start with. And later on, they will reverse the market. So once you understand how they are making moves in the market, the players are here to grab the money of the traders. So we should not lose again and again our money, hard-earned money. So it is something like in a subway, you come across a lot of theft is happening, and you won't walk along the subway carelessly. So you have to be cautious, and you have to protect your purse and see that you are not being looted. Again and again, if you lose it, that means your carelessness. So let me answer to the questions which are asked here. So I am not taking any position. I just explained to you that we will be doing sell and buy trade in the case of Euro and GBP because they are expected to make a dip, and then later on, from that of the late US session, they are expected to firm up. And that is what the forecast also says, that they will swing and firm up. 7th, they are expected to swing and firm up and then swing and rise during the US session. During the swing, it will come down and hit the stops of the long holders, those who buy after the rise, and then afterwards they rise the market. So that is why you find the early and the late sessions. The early sessions, they make the swing near that of the low or near that of the high and make the impression to that of the traders the market is going to drop, but later on they rise. Sometimes they will give the impression during the early session the market is going to rise, and later on they will drop. So the early and the late sessions, you can trade the majors. Mid sessions, you can trade the crosses. So that way, if you do it, you'll be able to really make money from that other market. Okay. So I will try to answer the questions which are asked here. Okay. Ramiz has got a question. Please advise with regard to the market to checking the high and the low levels between 2:30 and 3. See, I have given the time as 2:30 to 3:30. See how they have come. Now, in the case of GBP, you can understand how they quickly dropped it after making an upward stop. Only if you look into that of the live market code page, you will be able to really appreciate. If you look into that of the chart, what happens, the candle formation, and the candle formation might give a wrong impression to you. When you come across red candle, immediately you may just sell or buy or whatever it is, or green candle you buy. But you should not be misguided, because if you want to really use the chart and get that knowledge about the market, you have to see the tick chart. But that is unwieldy. Continuously see the tick chart. That is what you come across in MetaTrader 4 platform. Adjacent to that of your trading window, you come across the tick chart. But ultimately, if you look into the tick chart, you will not be able to understand anything. But if you look into the live market code page, you can see how they have finally done the upward stop move. It is being demonstrated before you now. So between 230 and 330, they set the initial highs and the lows. That means sometime they 230 they will set the high, 330 they will set the low, or sometime 230 they set the low and 330 they set the high. So by 330 or 31 GMT, if you note down the levels high and the low, that will be the initial highs and the low for the entire day, 24 hours market. So the question is, high and low level between 230 and 330. Is this between 2:30 a.m. and the previous day 3:30? No, it is wrong, sir. And it is a question of, see, the day starts, every day starts with 00 GMT. No, international date time next to Honolulu, it falls. From there it starts 00 hours. And that is how the GMT starts. And the 12 GMT is the Greenwich Meridian time. So you find that it is a 24 hours clock, because you find that time difference depending upon our distance from that of GMT, or distance from that of the Greenwich Meridian time. So ultimately we have the local time. So if it is a 24 hours market, it is appropriate to follow the GMT time. So between 2:30 and 3:30 is during that of the Japanese session, not today and tomorrow, sir. Don't try to give a different interpretation. Then you will get confused if you presume it that way. Every day, 2:30, between 2:30 and 3:30, they set the initial lows and the highs. 3:30, note down, that will be up to 20:30 GMT. Afterwards, you find the gap time before that of the next day. So 2030 to 30030 is the gap time before the start of the next day. Then the next day, Japanese session, European session, US session. That is how the sessions are. The players are having the timings of this nature in order to handle the traders who commit positions during different hours of the day. And it is a 24 hours market. You might think that it is a continuous market, but you know that after the cut-off time, your platform will charge overnight interest if you hold the position. So it is not a continuous market. After every 24 hours day, you find the next day moves happening. The next day again, between 2:30 and 3:30, they set the initial lows and the highs, and that will be used as a reference level during European and US sessions. Okay. Ines, do you recommend to buy USDN now? Yeah, USDN you can take a buy and still use the hedge order 30 pips below. Okay, fine, you got it. So is there any other question? There any question? I'll answer to those questions. With regard to the trading strategy, because I wanted to give more emphasis with regard to the trading strategy, understanding the type of moves happening in the market. Because the forecast, I'm giving it on Mondays and Thursdays. And any doubt on the hedging strategy, I can explain. Now you find that they started making the slide. So instead of doing the sell and buy trade from the gap time just for 30 minutes till about 14 GMT, Instead, after the dip, similar to that of the European session, if you take a buy, then you can book profit during the late US session at a higher level when they rise. And once they gain the levels and breach all the resistance and go above that, and tomorrow everybody will become bullish. And the players are going to make the drop in the market. Because we know very well they don't do hat trick. They don't rise more than 2 days in a given time or continuously. Any doubt? Okay, no more questions. So the trading for the US session will be after the drop. Once we watch up to 14 GMT, 30 minutes from the start of the session, the gap time trade will be only sell and buy for a few pips. But it may not be a very significant profit-making trade. So we will avoid it. And instead, after the dip, we'll take a buy. And not after the rise, we'll take a buy. We'll take a buy when they are making a dip in the market and the intermediary level, they stop cutting. Or if they come closer to low or stop cutting the intermediary level, the psychological levels like 1.61, and they will just hit the stops below that of the psychological level. At that time, if you take a buy, then they will gain the levels. So ultimately, we only look for the support and resistance. But the players are lazy people because they got filthy rich money. And they will not be using all their brain, they will not squeeze their brain. And they will simply only look at that of the psychological level and try to hit the stops below that or above that. So keep that in mind. All our support and resistance calculation go waste because the players primarily concentrate on the psychological levels. So 1.61 is a psychological level, 1.6075 is a psychological level, 1.6050 is a psychological level. Whenever the market comes down and turns, we find out based on our statistics whether it is a Fibonacci retracement. Okay, we'll say because of this Fibonacci retracement, that level happens to be a support. Okay, it is due to MACD divergence. Okay, it is because of MACD divergence. This was acting as a support, then the market reversed. So we can simply give so many excuses, but actually the players simply handle the stops below that of the psychological levels and above that of the psychological levels. And every 25 pips is considered as a psychological level. Keep that in mind and watch the market. Then you will be able to really understand how they are simply easily manipulating the market. But we are trying to understand when they are talking in Greek, we are trying to understand by reading it in English. Instead, if you read it in Greek, it will be giving a very simple meaning. So read their language and enter into their shoes, then you will find trading becomes a child's play. Okay, no more questions? Oh, there is one question from Uni. Will USD CHF stay above 0.94 for the rest of the year? Definitely, sir. USD CHF and USDN are expected to continue to gain the levels during the year till the year end, and also the first 2 months of the new year will come across the continuous rise in the case of Euro, USDN, GBP, USD CHF, and USD CAD and Australian dollar. They are expected to make the wide range swings. USD CAD is expected to make the higher level wide range swings. Australian dollar is expected to make lower level wide range swings till year end. That is the derived forecast based on my algorithm, but we have to fine tune it on a daily basis and find out how exactly they are going to make the moves. Accordingly, we have to take the trading positions. Okay, no more questions. So these are all my contact details. If you are interested, you can send me an email or just contact me over phone if needed. Not for any business purpose, only if you want any clarifications with regard to my trading system. And I'll come back on Thursday to do Asian Session Live Market Analysis webinar review of the forecast, what I have given it on Monday. So on Monday, I On every Monday, I give the forecast for the entire week. On Thursday, I review the forecast before you so that we'll be able to understand the reliability of the forecast. Then, based on that, we can capture the profit from the market. I'm not expecting any reward from small traders, and I want the traders to eliminate the market fear and capture small profits from that other market at ease without much of a tension. So wish you all happy trading. See you on Thursday.